talk all the way through it.
Sounds good.
There we go. Now we're recording.
Okay.
All right. Now that we've covered two birds with one scone.
Exactly.
And torn that apart. And listeners are just not going to get to know what the hell we're talking about. We're just going to start with two birds with one scone. And then they'll have to DM us to find out.
Exactly.
Yeah. It's a trick to get you more deal flow. Actually, it's if you're raising and you're focused on financial inclusion and you're also curious about scones, then please email.
Horrible combination. There we go.
We're changing your Twitter bio right now. Anyways, all right, let's jump into this, man. So normally I like to start with a little bit of background on like where you came from, all that kind of stuff. But after we got to know each other a bit, you said something that really resonated with me, which I don't know if it's like a groundbreaking idea or anything, but using it as a North Star, I think, is unique. So the quote that you said is, investing is a vehicle for us to affect change. A little bit of a duh factor, right? Like when you see kind of what's happened in the world due to VC investment, yada, 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 like we see that. But the thing that I think is unique about you and unique about Flourish and unique about your background is that it's not just affecting change, right? Because change can go up, down, good, bad. Change could be a lot of things. So I kind of want to start with the story of UPI in India and then get into your background from there. So how do you feel about starting there? And then we'll just get weirder. And weirder.
Let's do that. I mean, I don't know about weirder, but cool with starting with UPI. First of all, listen.
I promise it's going to get weird.
It's good to be here. It's good to talk to you. You've had a number of my friends, by the way. You've had Joe Robinson. As you know, I'm an investor in Hummingbird. So he's a great guy. We just had our board meeting.
He is.
And he's just phenomenal.
He is.
And then you've had...
He's
exactly. And surprisingly, right? Because he comes across as like...
Yeah. You don't expect it. Especially with a company like Hummingbird. You're like, oh, you have a sense of humor. A dad. I was scrolling through LinkedIn and I saw some picture of him standing in front of a laundromat and just... the dad joke-atude of that, and
I love that one.
Money laundering, laundromat,
and also the way he looked. He had this like knowing look at that photograph. Like I'm in on this joke. Everybody.
It kind of looked like a New York Times like front page. Weirdly, like he was very well posed, and like the lighting was.
It was
great,
a good one.
He was standing in front of a
And then Joanne. You've had
portfolio?
Joanne and David. Of course, Joanne and I conceptualized Air and got that going a few years ago, and she's been a huge partner.
I don't think I knew you were part of that conversation. I love
that's another story. I mean, if in the weirdest part of our conversation, I'm happy. Of course, Joanne is like the OG. I think we can call her the OG.
Joanne.
It's the OG.
Joanne is Joanne.
Yeah, exactly.
Like you can't even call her an OG. She's like pre OG. Not in like not like that's not an age thing.
No, I totally get it.
Built,
I totally get it. Yeah,
she's
amazing.
Built this tech world. Yeah,
and she's just an amazing person. And then you had, I think, I just looked at the recent, sessions, and I think Dan Kimmerling also came up, who's an amazing guy, and I always enjoy his company.
Dan's fun.
Exactly.
You just named a number of people that if you look at them from the outside, you're like, man, that could be a boring person. And then you get to know them and you're like, oh my God, you know where all the bodies are buried.
Oh, that is great that way. I mean, he has a lot of guys. Okay, so UPI. All right. So UPI, Unified Payments Interface. The story of UPI actually, I would say is sort of a wake-up call, for the US on instant payments. As you know, sending money in the US is painful. We all complain about it. I mean, why am I being charged $30 to send money the same day? Like, that just doesn't make sense. I don't know if you know Aaron Klein, by the way, at Brookings. Have you ever talked to him or read his stuff?
I'm not fancy enough to know.
Listen, you should quickly get fancy and get him, because he is awesome.
I'm going to write it down.
Aaron Klein, I'll send it to you separately too. And he did some work with us earlier this year and last year. And, he quantified what it has meant for money to move slowly in the US. So over the past 10 years, the cost of slow payments to low-income Americans, in particular, people with less money, was estimated to be over $100 billion. And this is all the stuff that goes to check cashers, because you want your cash right away, right? It goes to payday lenders. It's all baked into the bank overdraft fees. All of those things. It's $100 billion over the last 10 years for low-income Americans. That's because our payment system moves so slowly.
Break that down for me a little bit. Is that kind of like when they say shutting down this bridge is going to create this amount of like economic loss hypothetically, or are we talking like real dollars, like real overdraft?
No, real dollars. It's from the bottom. Yeah, but it's related to the analogy you made in the sense that it's sort of the consequence of money not moving fast in the system is that you end up doing all this other stuff, and this other stuff costs even more money. So it's slow to move money, and then you're paying more money to do this other stuff, and that's just ridiculous.
Yeah.
And of course,
I don't know if you see that, but I'm in Kansas City, so I'm very familiar. The payday loan capital.
Oh yeah, exactly. And so UPI is, as the name suggests, Unified Payments Interface, is an API layer. Basically, it's just an API layer that connects to the pre-existing interbank transfer system in India. And so this is going to blow your mind. It launched in 2016. So I was based in India for a few years with the World Bank. I was doing a bunch of other things, and I got involved with a group that was building this kind of stuff. And so it was officially launched in 2016. And I think as of last year, it is reached 50 times the volume of instant ACH, not the entire ACH volume, but in the US, instant ACH was roughly launched the same time. Happened to have been launched roughly 2016. So in the same period, and people say, oh, it's India, lots of people, but actually America is more digitized. Okay. There are more people in the banking system. There are more access being given to the banking system. So it's more a reflection of just the architecture and the nature of this system that it is, hit 50 times. I think it's over 2 billion transactions a month. I think instant ACH was easily sub 50 million, I think, last year.
Gotcha. So you're talking not necessarily volume of dollars, but
transactions. Yeah, volume of dollars. I don't have that at the top of my head, but I think volume of transactions is pretty sizable. Of course, ACH is 25 billion. I think last year the overall ACH transaction volume is pretty sizable.
Wow. In my head, that's low.
Yeah, I know.
In the billions and trillions, I'm just like,
you're like whatever. Yeah, exactly. But the bottom line is, this system launched in India, surpassed instant ACH in the US, roughly the same time period. And what it does, it allows you to move money into and move money out of any bank account in the system and any wallet in the system. And in fact, Google Pay, I don't know if you know this, Google Pay is the second largest money transfer service in India now on this system. It grew huge. On this system.
I had no idea.
I think it is maybe 800, 900 million transactions. So it's hitting the billion mark on a monthly basis. So it's a pretty sizable player on the UPI system. And in fact, a few years ago, I think it was in 2018, 2019, maybe around that time, the Google Pay team actually wrote to the US Fed saying, hey, you got to do the same thing in the US.
Yeah.
And you need to, kind of be inspired by the system in India. And you've got to do the same thing in the US because, as you know, we still don't have a Fed instant payment system. So,
yeah, I'm aware. It's starting to turn into a meme. The Fed.
Please make it a meme. Seriously, like someone, please just because listen, we had UPI was a wake up call before the pandemic, but the pandemic showed us how bad that stuff is. And how it can really hurt people. People needed cash right away, and all over the world, people were able to send money within the same day, within 3 days, within seconds in some countries, right? And here it was like months, and then it came in checks, and then money was sent to the wrong people, it's just ridiculous, So anyway, I was based in India, and I got involved with this group that's technologists, investors, startups. It's like a whole government officials, a hodgepodge group that was like, let's build stuff that leapfrogs this country. That is the change, as you were saying at the top. That is the true meaningful change. It transforms this country, and it's pro innovation, and it's pro the small guy. It's pro like new stuff. Let's create things that take us forward, leapfrog the system. And UPI was one of these ideas that was conceptualized. And I was there at the launch. I think I was telling you when we last spoke, like it was like a party. There was like a disco ball. I remember it being like a crazy one of those. They must have just hired a wedding planner or something, like because the guy just went crazy, and the room was full of all these startup founders, and the UPI was being introduced to them, saying, "Guys, you got to take this on." And I remember Nandan Nilekani. I don't know if you know Nandan Nilekani. Nandan is one of the Indian billionaires. He created Infosys. He was also the guy behind.
Okay. Well, I know what he's done. I don't.
Yeah, he was also the guy behind the Indian ID system. He was the first.
Shit.
Yeah, and he is the visionary behind this.
Say his
Nandan Nilekani. I'll send it to you separately. Yeah.
Yeah. I don't think my American brain's gonna. Say
No worries. By the way, he's an amazing guy. And he's just an amazing guy. And so he was up there. He was one of the visionaries behind all of these, what you could call these public good systems, and UPI is like one part of that stack. And so he was up there explaining this. And I remember like one of the startup founders like raising his hand. It's like, Nandan, like, this is awesome, but why the hell do we have to partner with a bank to do this? We are here to like beat the banks. And then Nandan was like, what problem do you have partnering with one bank? So this was like the debate that was going on live in that room, where he was saying, look, you can move forward just one bank. You just need to find one bank partner, and you can be part of the system, and you can move forward. And that was part of the, amazing vision of this. It was saying, hey, even the smallest startup can get access to this system as long as you find that one bank partner. There are many bank partners to be had that were already certified and part of the system. And then it was telling the incumbents, look, we're not challenging your hold on the accounts. Okay, you keep the accounts. All right. But you can't like block other innovation moving forward. Right. So this stuff has to come on. These guys need to get access, and you're going to make it possible for them to build the next layer of innovation on top of that.
Yeah.
So
I'm noticing some overlaps.
Exactly.
Small overlaps, at least, between the U.S.
Yeah, in the U.S., I think the progressive part of the Democratic Party, I think, needs to recognize that you can embrace innovation, you can challenge incumbents, you can create room for the small guy, and the small gal. You can transform the system without, kind of being technophobic and without necessarily fearing some of the fundamental ideas in what technology can bring. And I think that's one of the things that I loved about being involved in that work in UPI. I mean, it was just, and that was one of many things I was fortunate enough to be involved in. And that's really sort of the motivator, right? That's what when I mean by change is that kind of change. I mean, the system has totally changed in India as a result of that. We've transformed the architecture of finance fundamentally, and that's the stuff you want to do.
Yeah. So has that created just a renaissance of entrepreneurs in the finance or fintech space? Like the fact of these new, or maybe not even in fintech, but just the idea of this new level, this new type of architecture, new rail to run on, has it kind of created a whole bunch of entrepreneurs running towards it? I think you were just kind of hinting at that.
100%. I mean, look, you don't need infrastructure to inspire entrepreneurs, right? Entrepreneurs are going to do stuff. True. And they're everywhere, and they're all the time creating things, so that's going to happen.
This is true.
And in India, that's happening more and more and more, right? There's no doubt about that. And I remember PTM, you know about PTM in India.
Yeah.
And Vijay Shekhar was on a panel many years ago, the CEO of PTM, and he was saying, when I first started, no one wanted to work for a startup because, in India, you have arranged marriage, you have these matrimonials in the papers. So no one wanted to say, I work for a startup. You're never going to get married, basically. That's what it meant. It's like, it was the most uncool thing. That is,
that's wild.
It is wild.
I take it that's changed.
Yeah, this was like 2016 even. You would say 2015, 2016. That is now no longer the issue, right? It is just, this is the future. People have embraced it. And I think Nandan and all of these folks have played a big part in it. And of course, once you get the idea and you want to do something, this infrastructure just makes it easier, right? I mean, the fact that you can get access to all the bank accounts in the country, that should make it easier. The fact that you can KYC anyone in the country of 1 billion people, that should make it easier. So that's the idea. It doesn't mean like we're going to suddenly spawn like, amazing new entrepreneurs. It's just that when they arrive on the scene, their on-ramp is pretty easy.
Yeah. Well, I mean, it reminds me of at least Unit in the U.S., who's part of the Flourish portfolio. I mean, they're building against a much harder...
Exactly.
Much more of an uphill battle in terms of, ACH settlement and everything else. But the general thesis and like underlying raison d'etre, like reason of living, seems very similar.
You bang on. I mean, the ethos is very much the same, and that's why we are investors in Unit.
Well, and a Thai.
Amazing.
Hard not to love and hard
exactly.
not to invest in. I'm still trying to find somebody that'll say something negative about either Sheel Monat or about a Thai MP. Those are the two.
Impossible.
And ironically, Sheel's an investor. It's impossible. I cannot find a person. I'm pretty convinced that Sheel's just murdered everyone. Like anybody that has a negative opinion of him, he just like
they're out.
Murders them and puts them in the ground. Sheel is actually Dexter. I don't know how often Sheel listens, but I know he listens occasionally. He was one of my first guests, and I know he listens occasionally. But Sheel, I hope you listen to this because I just called you a serial killer.
Exactly.
Let's keep going into a little bit more of like your background, right? So that's a great stage setter. But how the hell did you learn all of this shit to even know to get to that spot in the world? And specifically, one of the questions that I really, really wanted to ask you when I was creeping on your LinkedIn, in 2002, for 2 years, you kind of hinted at it earlier about the World Bank, but you worked on gender and development.
Yeah.
What does that mean?
Okay, all right. So first of all, you mentioned Sheel, right? I think Sheel often tells this story about C.K. Prahlad. Do you know C.K.? Are you familiar with this?
You're just like throwing out all like these are.
All right. So you know fortune at the bottom of the pyramid. You must have heard that phrase. You must have heard this idea.
Yeah.
That's C.K. Prahlad.
Yeah, I've heard that.
So that was his book, and that was like the idea a while ago that a lot of us were really influenced by, going back 10 plus years, 20 years. 15, 20 years was this notion that you can serve poor people and you can build sustainable businesses doing that. Mm-hmm. And I think we were all kind of really taken by that. And Sheel talks about how he actually went and actually worked with C.K. Prahlad, I think. And because he was also inspired by that. I was also inspired by that. And, I was actually really enamored by microcredit going back 15 years. And that was like the front edge of innovation in emerging markets, And so it was basically, group collateral, right? You're poor, you have literally no collateral. How do you move forward? You have little money, no collateral. What do you do? Yeah. And so this idea that the group would vouch for you, your family, your neighbors, people say, hey, this guy's a good credit risk, help him launch that corner store or whatever, and that was pretty powerful. And so that I was kind of interested in being part of that. Because I was like, that is like the expression of fortune at the bottom of the pyramid. Like that's how it comes to fruition. That's how it's real.
Yeah. Well, I mean, hence Sheel getting into Kiva.
Yeah, exactly. And in fact, Chris Larson, before Ripple, he did Prosper. And I remember talking to him at that point, and he was saying that he was inspired by his trips to Vietnam and seeing microcredit. That was like that's what gave him the idea for Prosper. I mean, P2P lending has had an interesting history, but that was the kind of inspiration for like, how do I digitize this microcredit lending world? Yeah. And of course, Kiva was like, how do we folks here who have some additional capital, how do we finance these loans, right? All over the emerging markets. I think that was the primal notion was that. So I started talking to people, and then I met someone who had just kind of set up a microfinance entity in India, and they were looking to hire. But then he also turned around to me and he's like, actually, I'm talking to the Gates Foundation, and they are thinking like this stuff on microcredit is interesting, but it's broken. It's mono product. It's like this. It's loan. Basically, it's saying anywhere in the poor world, if you need money, you got to start a small business. That's kind of ridiculous.
I never. Yeah.
You got to. So it's mono product.
Very good point.
And it doesn't scale that well because because the digitization hadn't baked in then, right? It's still it just doesn't scale that easily. And in fact, if you scratch the surface in a lot of the emerging markets outside of India and some Latin American countries, it was really propped up by like grant money, and donor money. It wasn't really meeting that commercial, threshold. And so we got to change that. We got to revolutionize that. And this was, by the way, 2006. I'm an old man. And in 2000.
No, I mean, I say geez because it's unbelievable that some of the infrastructure. Well, I mean, some of the infrastructure existed, but just the fact that people were thinking this.
Oh yeah.
In 2006, like I was a freshman in high school, dude. Yeah. That's wild.
My son is a freshman in high school now. There you go. So 2006, we looked at. This is 2007. The iPhone comes out. Right. So 2006, we are like, okay, so this guy says, look, the Gates Foundation, I'm going to get, whatever, 20, $30 million from them, basically to go out and innovate, to go out and like find new models. And we have an 80% failure rate. Like if we are not failing, that means we're doing something wrong. So we have to, and I was like, this sounds very cool. Like, I want to be part of this. He's like, well, let's work this out. Let's be part of this. And then we started working on this. And what we looked at is that the growth rate, cell phone growth rate in emerging markets, not the actual handsets that were available then, but the growth rate was going to outpace the growth rate in developed markets. It was growing like wildfire. And we're like, we need to build something on these rails. Like, these are rails.
Yeah.
And that's what we got to crack. Now, M-Pesa. Are you familiar with M-Pesa in Kenya?
Yeah, very familiar. And we're just going to go back deep. Laura Speakerman was also one of my...
Exactly. I'm also an investor in Alloy, by the way. So
it's so incestuous, this world we live in. But yeah, so Laura was, I think, one of the first to educate me on M-Pesa. And since then, I've tried to keep abreast. But yeah, very familiar-ish, as familiar as I am with anything in outside of
I was just talking to Sultan Megji, by the way, another guest for you, who is the Chief Innovation Officer at the FDIC, one of the U.S. regulators.
That would be a fascinating conversation.
He spent most part of his career for an organization trying to get mobile money working in Africa. Like, it's kind of crazy. Like, it's like amazing. So anyway, 2007, M-Pesa gets launched, right? And we were advisors to the UK government, this group, to give money to this telecom in Kenya. And in fact, I don't know if Laura told you this, but the origins of M-Pesa was, how do we digitize microloans? Because this is, your brain can only take so much, right? So you're like looking at microloans, it's like not working. We're like, all right, how do we get them to work better? Let's get them to work through cell phones. That was the first step. And then when people started repaying their loans, but then people started doing more because you gave them a payment system, basically.
Right.
So people were like, we can send any money for anything. And that was that's when people and I think M-Pesa's original projections were like 1 million people, or no, less than 500,000 people or something like that in Kenya in 12, 18 months. And like in a few months, they had already reached 1 million people. Like, it just grew.
Yeah, I was going to say
they were shot in a big way.
Fast.
So that, I think then, that was the world I got involved in, basically, and then we kind of propagated mobile money systems all over the world. Literally all over. Some of them worked out really well. Some of them failed phenomenally.
Yeah.
And it, taught me a whole bunch of things about how to do this stuff. And, we worked with startups. We realized this is actually the origins of some of the work I ended up doing with Omidyar and Flourish, which was, we're going to evolve the system. We can push innovation, but we have to evolve the regulators and the policy environment with it. So I remember, helping the regulators in the Philippines develop an e-money regulation for the first time in the country, And I remember we were advising the Pakistani central bank on, hey, should they permit telecoms to buy banks? So you couldn't do it. You couldn't say, hey, let's use cell phones and do banking, without building all of this other stuff to make it happen. And so it really exposed me to why that is also important. Yeah. And we need to get involved in that and then, set me up for lots of other things later on.
It's really fascinating when you take a step back and you look at the timeline of finance and telecom. I've never really thought about this until you were just talking and thinking about, right, like the the mobile boom right, in 2007. M-Pesa kind of follows onto that. But it's not stopped there, right? Like pretty much everything is like even today with some of the banking as a service stuff, like the bond where I was previously, like the CEO was the COO of Twilio, right? There's like this weird little overlap that just kind of continues to happen and happen and happen. And it also beckons back to some of the original, I don't know how they're phrased. I'm guessing you do know how it's phrased, but I just call it unique underwriting methods, especially with the cell phone. So in that 2007, 2006, whenever it was, when did that piece start getting involved? Like how charged you keep your phone, all that kind of stuff?
Look, already telcos were doing small, because in the US we are postpaid, right? In the rest of the world, telecom is prepaid. Right, you're buying as you're using, basically, pay as you go, right? And so for people like truly at the base of the pyramid, if you don't have enough money, how do you keep your phone charged for use? So telcos were already running small like lending operations. They were already doing small ticket size, little bursts of lending, so that people would basically cycle that back into buying airtime, so they could talk.
That's wild. This is a very American moment, but I always thought that was sheerly about like if you keep your phone charged, you're probably a responsible individual. I never thought through that.
There was lending going on. Yeah.
Versus post-paid.
No, and by the way, you're 100% right. I was involved in 2008, 2009, 2010. That's when like your behavior on cell phone, how that could be a basis for lending started to emerge. Yeah. And we looked at data, to your point, like if you keep your cell phone charged, that's responsible. We looked at that and there was clearly a pattern. And what was really interesting is like there, as you can imagine, you can see it in how all of us deal with our money differently. There are people who would like let their account go up to down to zero and then charge it up again, right? And that was a different profile than someone who kind of maintained a steady balance of their charged account. And so you were trying to figure out. So anyway, that happened a little bit later, but the telcos were already lending in small ticket size on their own systems in one way or the other, And I forget the name of the company. There were a couple of big companies that emerged from that.
Yeah. Do you have your phone near you?
Yeah.
Out of curiosity? Yeah. What percentage are you on? Let's do a back.
I'm 35.
Find out.
I'm 35.
I'm on 3.
Yeah, there you go. I think I have a better credit risk right now based on this simple.
I think you're a better credit risk.
No, I don't think so.
I'm not sure what that says. I feel like I need to talk to my therapist about this, but that's absolutely hilarious. That's funny. So how did you get? You hinted at it a little bit there, but tell me, like, how did you get to Omidyar? And then I imagine the connection between Omidyar to Flourish is Omidyar.
Exactly. So the group I was with at the World Bank was Omidyar Network was one of the financiers, and you have to remember that sort of all roads lead to this concept of can we build sustainable businesses in these difficult situations with respect to people with less money, right? That is the core idea here. And Omidyar Network pioneered what is now called impact investing. It was not called that then. They were like, hey, again, we are like all sort of in the long line of this, fortune at the bottom of the pyramid notion. And so Omidyar Network was one of the financiers of the group I was at the World Bank, and Tillman, who's our managing partner at Flourish, was the CEO of this group. And so when he joined Omidyar Network, he recruited me. So I was in India, I was involved in UPI, I was doing all this other stuff. And he was like, hey, you should come to the Omidyar Network group because we're kind of pushing those boundaries of impact investing that you've been interested in all this while. So that's how I got involved. And our team, so we were the financial services team of the Omidyar Network. The Omidyar Network grew to be over 200 people, lots of different areas. But on the financial sector, actually this notion of you can build a sustainable business, even for people with less money, worked better, right? You could build a good lending business, a fair, reasonable price, no price gouging, no crazy interest rates. You could improve people's lives because you got them a loan, right? You could build a payment system again, that improve people's lives. So we were able to prove like, hey, this stuff makes money, not a lot, but makes meaningful money, and it can improve people's lives. So Pierre was like, let's double down on that, and that's basically the beginnings of Flourish. And so we spun out and became a separate fund.
Is financial health I see Omidyar across the entire ecosystem.
Yeah.
Has he always had, and I guess we're kind of asking you to speak for him a little bit, but maybe has he always had that passion? Did that passion come out of like work that he's done in his life, and then he realized that a lot of people don't have money? Did he travel? Like what made him care so much about this specific area?
Yeah, that's a good question. Pierre and Pam Omidyar, they are
both
they are just I think Pierre would say that he is an accidental billionaire, right? I think it's like, and there are many such, right, who kind of are honest about they don't know exactly what happened, but they made it, and like I think it's like fastest from first line of code to IPO in tech history. It just moved really quickly.
Wow, I didn't know that. I believe
it was just
based on the time that happened and everything.
He was like one of those like internet business folks who were like, the internet is going to change the world. Like you see a bit of that in the Web3 crypto world now. There's a whole generation of these folks who are similarly saying the same stuff that the original internet pioneers were saying. And so Pierre was one of them, and he built. I think there were like multiple things that he was doing. eBay was one of those ideas that just took off. And of course it didn't.
Oh wow, that was one of many things he was.
Yeah, there's a book actually that does a good job describing the sort of origins. I can't remember. I'll send it to you. Lots of stuff to send to you. Yeah.
I was gonna say our follow-up
is massive,
robust.
So I think he did what a lot of billionaires do, or people who get rich very quickly. He's like, I'm going to create a foundation and I'm going to do philanthropy But like in the first year trying to set up that foundation, this is before the Omidyar network, eBay had reached 1 million people, and he had just basically like set up the payroll of the foundation or whatever. And so in his mind, he's like, we need more businesses like eBay. Like we need to do more of that stuff, and I think that's really at the heart of what motivates him. It's not about the sector. It's about where are these entrepreneurs? What problems are they solving? Who are these folks that are trying to have impact? And those kind of ideas, that ethos got baked into what Omidyar Network is, and then that then got further baked into our work in the financial system, and then led to us spinning out and becoming Flourish. I don't know if I kind of try to answer that question. It's not like he's thinking about
it's a hard. You're answering for someone else, so I appreciate the perspective in general. I'm more and more fascinated by this whole generational wealth thing.
Yes.
It's not because I'm developing generational wealth, but it's more so just because of watching people handle it in different ways. Like being in Kansas City, Patrick Mahomes as an example, right? Man just got $500 million over 10 years, and he's investing in some really interesting ways in Kansas City. But pretty much all of it's philanthropic, And then Kansas City also has this history of, or you being you, I'm guessing you're familiar with the Kauffman Fellows.
Yes, I do.
Yeah, and the Kauffman Foundation is the base of that. And I love the Kauffman Foundation, but I think there are things that Ewing Kauffman, rest his soul, rest in peace, my friend, is like one of my heroes that I never got to meet, would probably question some of the work that they're doing. Right, because the strategy shifts a lot. Is it Kansas City or is it global? Is it regional or is it Kansas City? Is it this or is it that? And it's evergreen, right? So they're doing a good job of investing and everything else, and that money will last, and it has created so much value for the world. But I'm fascinated by the Omidyar direction because of the fact that Flourish is Flourish and is flourishing, but also it's supporting the Alloys of the world, the Flutterwaves of the world, the Hummingbirds of the world, the Units of the world, and also at the same time scrolling up a little bit into the ecosystem building piece, like the FinHealth Network and FinRegLab and AIR, to our earlier conversation. So it's like this interesting balance between funding the nonprofits that will then feed into the for-profits that you're investing in by creating better regulation for the world, it just seems much more sustainable, and it seems like it's doing better things for the world of business. And I think that's the thing that I struggle with about some of the Kansas City philanthropic stuff, is it's a lot about philanthropy that ends up going to people's salaries to solve the problem versus going to a business that would economically have incentives to solve the problem.
No, I mean, Pierre would appreciate, I think, what you're saying. And I think you're right. I think that's what we've been trying to do at Flourish, and I think you're doing it. I appreciate you saying that. I mean, we are obviously internally always debating and trying to figure out, how do we show up in the world? How do we have impact? What does it mean? And I can tell you, I think if you say, hey, you backed a company that's addressing financial crime, that's a pretty important deal for the financial system. That's why we backed Hummingbird. African Americans, Latinx are 2 or 3 times more than white Americans to be victims of income and debt related fraud. Period. We have one estimate that's like less than 1% of financial crime that we can, I think Joe brought that up, the UN data on your conversation.
She's got that tattooed.
Well, what is sad about is that's the only data point we all have. That's the bigger problem. We don't even have a clear picture of how bad it is, and so,
I don't think we get it. Do you think that the average American, when we talk about money laundering, understands what that means?
I think that I think that's one of the challenges, by the way, of the system we have built, is that so many of us don't fully understand how exactly it works. And it's hard to explain it. I mean, and even those of us who are in the industry, we've somehow, it sort of slips, the nuances sometimes slip our minds, and because we've built a complicated stack, and so actually one of the things we've started doing, it's this comment of yours is an inspiration for that in a way, which is, can we build, can we help people understand the system better? Who knows what it'll bring? We don't know, but can they just know what they're dealing with better? And overdrafts, a lot of people don't fully understand how ridiculous that is. And they feel the pain, but how ridiculous the whole system is. So we started actually financing documentaries, and we started, so we produced 2 documentaries just to get our feet wet. One is called One is called Out of the Blocks, and it's actually on Maryland Public Television. And what we did is, there was this amazing NPR podcast called Out of the Blocks. And it's phenomenal. If you haven't heard it, you should check it out. It's basically this guy who's been going block by block. It started in Baltimore. That's why it's on Maryland Public Television. Block by block, talking to small businesses just about their life and their challenges. And of course, those businesses were really, most meaningfully impacted by COVID last year. And so we, through one of our partners, we reached out to him. We said, can we kind of go out and find out what's happening with these small businesses? And so we shipped cell phones to them. With COVID restrictions and everything, you couldn't send a film crew. And so people basically filmed themselves. And we strung together this documentary where people are talking about, through the course of the last, basically, most of 2020 and a little bit of 2021, what happened to them during COVID, and what was government relief and what was sort of the financial struggles like. And then the other documentary we produced is called Savvy. We actually, that was largely made. We contributed what was known as finishing funds there. And that's about women and finance. And the fact that even, the next generation of women are abdicating basically control of money to men in their relationships, that you're still seeing, and women are disproportionately bearing the burden of student loans, for example, and so on and so forth. And so the documentary is really cool because that's why it's called Savvy. It found these social media influencers, women who have changed their own lives, taken control of their finances, and then they, either by design, they chose to be influencers, or by accident became influencers. And so they are the savvy. And so Savvy basically documents their lives and then also has guidance and advice on how people can manage their money better. So we have like a whole slate of projects in this stuff, and the germ of it, like the core idea behind it, is what you were saying. How do we get people to understand what's happening with the system better? That was like the motivation for it. We ended up doing these projects, but that was the motivation for it.
Yeah, it's fascinating. Now I'm now your 89th subscriber on YouTube. 2 seconds ago.
Yeah, exactly. But be kind to us. We just started. Sorry.
I mean, no, it's fascinating, and I mean, so now you got my head turning. Have you heard of a woman or heard of a show? The woman's name is Marianna Van Zeller. The show is called Traffic.
No.
So this was actually like I think in the last episode that I did with David and Joanne, we talked about this. But this is one of those soapbox moments for me, because not only do I think people don't understand the plight of others in a lot of situations,
yes.
right? But especially in America, we really don't understand the plight, or not even the plight. That's such a fucking American way to put it. The just status quo life of those in emerging markets, overseas, South America, anything else, right?
We don't understand each other's lives.
We don't understand much of shit, really. Like, what's the average yearly wage throughout the entire globe? I think is like 37,000 or something. And in Kansas, or not in Kansas State, sorry, in the US, you're like below the poverty line, basically, if you're making that amount of money. But that's, it's just such a fascinating thing. Anyway, so Marianna Van Zeller, she's an investigative journalist, and I also, this woman is just my hero.
Awesome.
She is unbelievable. She's the best investigative journalist that I have ever encountered, outside of a couple
Zeller. Okay.
Yes. And Marianna, I think, is one word, and Van
is
separate. And listeners, I'll link to it in the show notes. I think it's incredibly important for folks in fintech to watch. It's a full series, so it goes through. It's the human impact of money laundering, right? So there's one episode.
I gotta watch this.
Cocaine. Yeah, dude, it's amazing. It's something that I try and force anybody that gets, especially in my last company when I was at Bond. There were a lot of people that lived in San Francisco, had the San Francisco experience, used to work at Airbnb, that whole vibe, right? But understanding the underbanked, understanding what financial lives are like for those in other countries, I think is just something people, understanding ACH is its own thing, much less, putting yourself in the shoes of somebody carrying coca leaves 400 miles for $35 or something like that, right? And it's just a perfect encapsulation of all of this. And it's in my role at Money 2020. I really want to find a way to get her there to help everybody understand.
That's a great idea.
But
actually, if you want, we should find a way to work together in your role at Money to do stuff.
That's what I was
seriously.
Thinking. We should partner. Yeah,
we should do it. This is what we want to do. We want to get these stories out. We think it's important. And by the way, our board, Pierre, this is one of the things that they really want us to show up in a way that's different, and I think that's why I always, whenever I'm talking to startups, I say, look, we are not, yes, we are venture capital. Yes, we will be looking at valuation, blah, 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 blah. But this is what I meant by, we want the system to change. And so we are talking to you because we believe you're part of the story from our perspective. And you could be part of the story from our perspective, and
well, I think together we can form a story, right? Which actually brings me to a question: Does Flourish have a podcast? Do you all have a podcast?
No, we don't have a podcast. Yeah,
maybe it's something
I think
considering. So. You have some amazing personalities inside of your fund, and you also have
good stories,
reach, and great entrepreneurs. And I
think it's a good idea. That's a good idea. I think it's probably in the works. I don't know. We should talk to Sarah or whatever and find out.
Yeah. Well,
all right, good idea. Good idea.
In any way, shape, or form, if it's if you need advice on a hosting system or anything like that, I'm happy to do it. And I love that you guys have this YouTube channel. I'm of the opinion that YouTube is the lowest hanging fruit in the world of fintech for storytelling right now. In the world of financial services, nobody is doing a good job of telling these stories on YouTube with video. There's a lot of great podcasts, everything else, but the video piece is lacking, and I think that's where especially if we're going to incept these things into the minds of Gen Z, like we have to have video, and it needs to be where Gen Z actually lives, which is
what do you think of TikTok?
Not where we're putting stuff.
Have you followed #Fintech? Do you have a TikTok account?
No, so I don't have.
You got to check this out. You got to check it out.
This is where I become an old.
Don't ever become an old curmudgeon. It's a choice.
I'm rarely a curmudgeon. It's just when it comes to TikTok. I've gotten on it. I have tried to experience. Like every time I get on it, it's something that I'm supposed to think is funny, that I inherently don't understand why anyone would think it is funny.
Don't repeat this in any other circles. This is already public. So you're gonna.
No, I mean, but this is the thing: is like Web3, DeFi, like all of that shit. Like I'm like, let's go, let's do it. But TikTok, for some reason, I'm like, absolutely not. I want nothing to do with you. This is the passing fancy that I'm going to just.
Well, talking about passing fancy, if you look at the #Fintech on TikTok. That went from 100 million to like 500 million, I want to say, in a span of few months earlier this year. That really caught my attention because people were going there to that hashtag for financial advice.
Was this at the same time as well?
It's obviously all connected. But it wasn't just that. You have like of course you have. I think Wall Street Journal, by the way, has done a couple of articles on this about financial advice via TikTok, and that there's a whole, as like with any environment, there are a whole group of people that are selling like crap, telling people horrible things, bad advice. But there's a whole
that's all.
Yeah, but there are others that are not, that are like these guys we profile in Savvy, who are basically Instagram influencers, who actually have compelling personal stories, like how they got out of a lot of debt. And look, like, what did they do? What discipline they took, and like how they fought off all these choices, and how they're managing the system. Those stories are on TikTok. Anyway, something to talk about another time.
No, I mean it is interesting. It is interesting. I think the thing that's kept me away from it is I think it's just like a confirmation bias of every time I open Twitter and I see any kind of TikTok-oriented financial advice, it's
what the hell?
It's some guy. Yeah, well, it's some guy with his, like some bro wearing a whatever.
There's a lot of things.
Talking about, well, I traded in and out of AMC 14 times today. I have no understanding of my tax burden, but I just netted $18, and you can do the same if you waste your entire day. It's like, what the fuck? So I'm a little biased, but I'll be open.
Yeah, be open-minded. And also the question is, this is pretty powerful. It's a massive reach, growing like crazy, right? How do we use it?
Yeah. I don't disagree. Just let me get over my curmudgeonness and then
let's do that.
Conversation. I'm with you. I'm just I'm very I'm going to be a late adopter on this one. I'll be an early adopter.
I'm not really an adopter, but I just find it like, anything that has this kind of reach, right, is having this kind of impact, especially with the new generation. I guess that's like the VC in me, right? You got to pay attention. It has some meaning. Where does it end up?
Yeah.
What does it mean?
Yeah, it's fair. I mean, the just the idea that it's addictive enough that it's the Chinese government. What did they decide to do? They turned it off from like 10 a.m. to 6 or 10 p.m. to 6 a.m. or something like that.
I know people who've got rid of the app because they found it so addictive. Like.
That's why I don't have Instagram anymore, because it wasn't good for my mental health. Honestly, I just have LinkedIn and Twitter because those are
exactly.
I mean, not that Twitter's really great.
Yeah, exactly. I was going to say that.
So tell me more about like your day to day at Flourish, and like what specific. I mean, you guys cover such a broad area. You could be investing in so many verticals, embedded finance, this, that, the other. What do you spend most of your day thinking about?
So, I've ended up in sort of all these different things that we do at Flourish, so I spend part of my time talking to startups, looking at deals, and I have my interests like in open data was one of the areas I was telling you about, on compliance systems, identity systems, more sort of the real sort of deep infrastructure stuff. And basically, given my background, exposure, experience, that's the stuff that I think my mind goes to. It's not that I don't talk to other startups.
Yeah.
Then
what do you see in the U.S. as far as open data? That's interesting. Do you feel like we're waiting on a regulatory something to happen before that can really get interesting, or is interesting stuff already happening there?
I think that definitely things will get more interesting when the regulatory stuff happens. No doubt about it.
Yeah. When?
Yeah. Well, it's more meaning. I mean, I'm an optimist. Even when stuff is, not working. I remember when we launched that program I was telling you about cell phones, people were like, people are not eating. People are hungry. How can you talk about cell phones? And I was like, you know that people are foregoing eating so they can be on a cell phone? So you got to find the silver lining on what people are doing. And I think the White House executive order, I don't know if you tracked that earlier this year, where of the two things that they put out for the financial system on competition, one of them was data portability, the other was the mergers and acquisition stuff. So I'm going to take some solace in that's meaningful. I know that the CFPB team is working on new 1033. 1033 is a section of the Dodd-Frank Act on data portability. I think the fintech community now knows that quite well. And so
talk a little bit more about that previous piece though, because my understanding was it was basically a commitment to make a commitment, less so than it was
the White House executive order.
The White House.
White House executive orders are the executive telling his administration or her administration, you got to act on this, and it basically means that it's become a political priority, right? And
so it's
signaling, and those who are like the advocates of this at the agencies now have a bit of an air cover. They can point to that and say, look, don't mess around with me, CFPB lawyer. I got to get this done. And so I think it helps give them that air cover. And so I'm optimistic that we'll see something next year. I think that's pretty significant. And it's really just the beginning, because in fact, I think it was just yesterday that Brazil took a major step on open finance. So open banking is the checking account data, the basic stuff. Open finance is your entire financial footprint being available, right, through APIs. And then others getting access to that and then building stuff for you. And the Brazilians, I think just yesterday sort of said, hey, if you wanted to, all of these agencies, the insurance providers, the mortgage providers, the lenders, etc., also have to make data available. And there's a process that they kicked off to make that happen. Mm-hmm. So that's, super exciting because unlike the US and a lot of other countries, I would say 18, 20 countries, it's been driven by rules. It's been driven by frameworks. I think that's,
right.
It doesn't matter. It can come any other way. But if you're an innovator, I think it makes a huge difference when those standards are clear. I mean, look at the Web3 crypto conversation, right? You want clarity so that you can build stuff and make something happen. And I think the rest of the world, you have a lot more clarity. It could be a lot better, no doubt about it, but you just have a lot more rules and a lot more clarity. You just don't have that here. And I'm also optimistic because the conversation is evolving on rules, because I don't know if you saw Plaid's announcement with a bunch of other companies on this, what are they calling it? Open Finance Data Security Standard, something like that.
Oh yeah, I saw the headline.
Yeah.
I haven't read that.
I'm a big fan. I mean, look. You could criticize, like, hey, these are a bunch of companies coming up with ideas and it's kind of siloed, and what does it mean for the full market? You can look, say all of those things, but fundamentally...
You could say the same thing.
Yeah, exactly. It takes the conversation forward. They looked at, I think, like 12 categories. They have like 60 plus, I think, I don't know why I came up with 60 plus, sort of, standards or security suggestions across the range, across those 10, 12 areas. I think that's great. Mm-hmm. So we can now talk about specifics, right? We can look at all of those and say, I don't like this. I like this piece better. I think it takes the conversation forward. I think all of that is very positive for this market. And in fact, when we did our study with McKinsey, this was how we originally started talking, Zach, a few months back. We quantified the GDP impact of open data systems on a multiple dimensions, and the two most important ones are just the level of data sharing that's happening and the standards, 2 by 2, simple. And on the level of data sharing, it's pretty cool given all the private sector activity that's happening in the US, right? Plaid and a bunch of others, and now we have payroll data and other data. I can see that just happening more and more. It's been the standards that has kept the real impact on GDP back in our analysis. And so these steps, I think, are very positive. And 1 to 2% of GDP impact, that's nothing to sneeze at. Just from this stuff.
Yeah.
Coming out of McKinsey, like, I would trust the analysis on this kind of stuff, and I think that's a huge deal.
It's a gigantic deal. I'm still so curious about the private versus public. It's almost like a race. And I think at the end of the day, we're all kind of working together. So maybe race is the wrong term, but some of the ways that private companies are trying to solve for RTP before Fed now does Fed later, whatever it is, that whole situation. And then on the data privacy stuff, like one of my favorite companies here locally is a company called Triple Blind. Yeah. So DAWs, I feel like depending on how fast things move, Triple Blind may take over the world and become that protocol before the protocol comes from on high in Washington. I don't know, but DAWs has done crazier things in this.
I think that's fine.
Yeah, I know. I agree. I think that's fine. I think
when we engage with regulators, and one of the big things we tell regulators is that you got to engage with the innovation. It's the basic thing you got to do. You can't be afraid of it. You got to engage with it. You got to understand it, and because if you believe you're going to come up with the sort of the next frontier of technical innovation, you're totally mistaken. That's just never going to happen. And so I think if it's, that's what's one of the great things about the US is that you have this emergent, the private sector is always ahead, but the regulators need to kind of absorb these new ideas and build the frameworks around it. And so that once that foundation is established, then true innovation, widespread innovation can unlock,
Yeah. Well, you guys are building that ecosystem. I wouldn't have had you and Em on if I didn't believe in what Flourish is doing.
Thanks, Zach.
Obviously a big fan of the entire ecosystem building you're doing, from investing in private companies to, facilitating the Davids and the Joannes of the world. So
appreciate that.
Consider me a fan, consider me, a proponent. And the last question that I always have to ask is, how can the For Fintech's Sake audience help you / how can folk get in touch if they're wanting to, pitch you something, talk to you about something, whatever it might
Totally
be.
Open for pitch. And please, contact us. I'm on Twitter. We're on LinkedIn. We are easy to get to. We are, I would like to believe, highly responsive. So open to any ideas, anything you're doing to change the system. And, so truly welcome that and appreciate the support, Zach.
All right. For sure. Absolutely. I'll put all that in the show notes, and we're going to have to talk offline about this money laundering stuff.
Yeah, we should.
We could probably.
Yeah. I made a whole bunch of notes here. We have tons of follow up. Look forward to catching up. So,
I love it.
All right. Good talking to you. Take it easy, buddy.